I would like to introduce now, we're going to have a panel. Otavio Vieira will be the moderator for this panel. It will be discussing fundraising aspects of fundraising in Brazil. And it will be like a team of 4 people, I think, Otavio? Okay. And I just would like to make a quick introduction about Otavio, and then Otavio will introduce the other panelists in there. So Otavio Vieira it has been with Group Safdie in Brazil for more than 6 years. He's responsible for the fund investments of the group. And Otavio has a career that started his career in trade, in the trading side, and moved into wealth management in the beginning of the 2000s, developed one of the largest wealth management companies in Brazil, and then joined the group in Safdie in 2005, and leads the process of investments for the group in Brazil. So Otavio has an MBA from Thunderbird, and his graduate studies in Brazil. So please welcome Otavio. Thanks.
I'd like to call the other panelists, George Wachsmann, Carlo Moratelli, Ricardo Toboaco, to come here, introduce yourselves and your company and your role within the company. So please join us.
Good morning. My name is George Wachsmann. I'm a founder and partner of BAWM Investments. We are a full-service multifamily office. We've been helping groups and families in Brazil for 5 years with helping liquid investments, illiquid investments, as well as capital preservation and wealth preservation. I'm also the current chairman of the Wealth Management Committee within Ambima. And I want to thank Otavio and the Terrapin for this invitation.
Hello, good morning. My name is Carlo. I have founded a multifamily office, and it was bought by Orey, a Portuguese group. And since there, I'm directing the investments and helping how to structure in Brazil. We do wealth management, and I always look for small funds, hedge funds, to seed money. It's that.
Morning. My name is Ricardo Toboaco. I now run a multifamily office, full service, for 8 years. Before that, worked 16 years with a single-family office, a bank, and insurance company called Icatu. I think that most of Brazilians know. My background, I was graduated in electrical engineering and Master of Science in nuclear engineering.
Okay, Ricardo, I will begin with you with the first questions of the guidelines here. What do Brazilian investors want, in your views, in terms of information, in terms of products, risk factors, general view about the needs of the Brazilian investors?
It's to tell what I think. Well, I think that the professional investors in Brazil has the same level of investments of investors of any part of the world. But this is not true for the private investors. My experience that the private investor in Brazil, or the new liquid, as I call the people that sold his farms, his businesses, and our clients, they don't know what they need. They don't know what they want. I think that the inflation in Brazil has miseducated these people a lot. So I think that this is one of the reasons there are so many multifamily offices, to try to help them and guide them, not only in terms of choosing one fund or another, but to set up a strategy and to take care of the money as a previdentiary strategy in mind.
I have a very particular view on that. I think Brazilians were hurt a lot by made of we had a lot of distributors of this product and this manager here, and I agree with you, they were buying a thing that they didn't know what they were buying. The other thing is that most big asset management companies and some portfolio manager of global hedge funds, they seem like a pirates here. They come once a year, they try to grab as much as they can, and then they leave, and even the information sometimes is difficult. So I think this trait of being here and set up a company with Brazilian representatives, I think is good, mostly senior guys. I think it's very helpful. I took the example of Schroders. It's a big asset management here in Brazil, so it's a successful story that should be mirrored. George, can you comment on my comments?
Well, I think that clients in Brazil, like clients anywhere, they want return. They could take some risk as long as they don't lose money. Right? That's sort of that's the general view. I agree that for some time the inflation, high interest rates particularly, have created an atmosphere where clients end up buying things that they are not really aware of where the risks are, and I think that currently we have exactly the same thing going on with high interest rates and a weak dollar and a strong real. So we are again in a position where it's very hard to talk clients into anything different from fixed income, steady returns, but they are again getting into things that they are either not paying the right attention to it, like getting into credit, getting into long-term lockups without understanding exactly what's happening.
Carlo, for that global hedge fund managers that don't want to set up a business unit here, how can these guys stand out from the crowd? Because we have been receiving a lot of visits. How can differentiate themselves and raise assets here in Brazil?
I have experience that one foreign investor trying to enter in Brazil and they buy my company, and it has worked very well. I believe that buy or associate with local companies can be very good for foreign companies. It's the easier way because you must learn many things when you come to Brazil. And if you are going to establish with investments, it takes more time than if you buy or change participate or associate with a local company. That's what I believe that can help all the foreign investors or funds who would like to establish and raise money here in Brazil.
On that, I would like to make a comment. I think that it's a perfect answer, but I would like to split the answer into what Carlo said is perfect when you are talking to the end client, right? If you want to reach the end client in Brazil, Carlo, I think, was one of the first that got a offshore partnership, and now yesterday we just saw that one of our largest competitors just announced a deal as well with foreign participation, and for the end client, that's the case because the relationship that we are building with the clients is a relationship based on trust. So, and it's being developed and leveraged on top of our careers and the relationships that we have with our clients for longer years. So it's much easier for a foreigner to come here, set up a team with local presence is different. But when you are talking with not the end client, but when you're seeing us as clients, then it's a different story, right? Because you should not, like Otavio made the example of Schroeder, which is a great example, but we don't imagine all hedge funds setting up offices here to do the business with Brazil. And here it's a trick question, because if you go and ask around investors or professional investors that have been buying hedge funds, for example, offshore. Usually, we have kind of a underdog situation where we tend to be kind of weird when a foreigner manager comes and visits us here. It seems to us that why would an offshore manager come to Brazil to raise assets? And the first question is it having a problem to raise assets back into his country that he wants to come all the way down to Brazil? Which is, I hope that we change this mindset, right? We are important now. Brazil, it's on the globe now. People know where we are. But still, I think that in order to change that view, the type of relationship has to be different, right? You get your first visit with a salesperson. The next visit will have to see the partners. Will have to be with the managers, and so there is a way to build a relationship with the local professional community also.
Ricardo, I learned that you are focused on matching assets and liabilities in your approach regarding the investments and mandates. How is your view about the offshore investments of your clients? How do you utilize your approach of assets and liabilities management?
Usually, we understand how important is offshore investments for our clients. There are several needs, different needs from each kind of client. There are clients that needs to cover a sovereign risk. They want to have assets offshore just to change the jurisdiction. Others, they have needs to establish a state planning different from the laws in Brazil. Others have enough money to have access to other currencies and other economic situations in the world. So our understanding is basically to see what they need, what they perceive as risk, and match this risk with the investments.
Mm-hmm. I remember that you mentioned some time ago that you also have an approach of potential liabilities, like a soccer player or an artist or a politician also can need, or maybe it's advisable to have some money abroad. Okay, can you comment on that, these special situations?
Yeah, there's also some situations like politically exposed people, not necessarily political in the sense that a political person, but a public person. And these kind of person can have an excess, a negative excess of the press. Can be in the front page of Vieira or something. And for them to have some privacy on their money, probably they will have to have some assets outside Brazil, some outside this jurisdiction. So this is one of the risks we see and try to match.
Okay. Carlo, currently, what are the products or the asset classes that your client base is most interested right now on offshore basis?
My clients, following what Ricardo told in the beginning, they don't know exactly what they want. So part of the work is explain all the different asset classes, because here in Brazil we have a very strong interest rate, and it's very hard to compete with the Selic, our interest rate. And I believe that here the investors are not used with flotations about fixed income. And fixed income here is you have every month near about 1%. Is what they want, is what they are used. If you are allocating the portfolio, or changing the asset allocation, You must do with very careful and see how can this match or combination will take them to another level, if they can gain more alpha than Selic, but with not too much volatility. So here, I combine credit, inflation-linked bonds, and some hedge funds. That's what I try to do with some investors. There are some aggressives that can take markets more developed. Then you can sell some funds more aggressive, and I would say involving stock markets. This is what I try to do then. But the preferred asset class are credit, inflation, and all the fixed income.
Okay, George, can you comment regarding the products that are looking for?
Well, as Carlo said, clients are really they're biased by the high interest rates. And just to give you an idea, a regular hedge fund here aims to get something around like 15% a year, which it's almost like our Fed funds plus 3 to 4%. And there is a high chance that they will get 0 in the year, right? Which will not be terrible because they will not be losing money in absolute return terms. But for the client, he's getting into a game where he can get like 3 or 4%, but he can lose the 12% that he has for sure. So it is a greedy game that the clients have to take in. And if you translate that into client talk, that is that go talk to a client that has been investing in local hedge funds for the past 5 years, and they will tell you that they are under the Fed funds for that period. So what we do to try to avoid that is first, as Ricardo said before, try to talk to the client and understand exactly and explain them what are the risks involved in every strategy or portfolio that we build. But we have been using credit for the past 4 years now, and something that we call structured credit, which is not simple corporate bonds, because the corporate spreads in Brazil are much tighter than abroad. The same company issues a corporate CD here tighter than he issues the same thing offshore. So there is a problem there. We are dealing with a different credit. We use hedge funds, but we are very specific into what strategies we are looking for. We tend to be away from the more directional strategies and more into the arbitrage and long-short strategies. And we use equities selectively for clients that are willing to. On the offshore side of the business, as anywhere else, we are looking for non-dollar denominations. We have been back to hedge funds and equities in some markets, but the effort is how to balance the portfolio away from dollars. For the client that has money here and there, it's an easy task because he is naturally exposed to reais more than dollars. But for the client that has, for any of the reasons that Ricardo mentioned, only all the money is domiciled away from Brazil, it's a much harder task with all the taxes that the government has been imposing. Then you need more sophistication to get there.
Okay, I have 2 more questions, but I would like to open up for the audience to ask our panelists. So I do believe.
I got a loud voice, so I'll just use it without a microphone. How much do you think of your clients are going offshore, percentage-wise? Is it a 10%, 15, half, or is it really sort of graduated based on the affluence of the family?
I can tell you with real numbers. First, as a background answer, think this. It's very hard to convince clients to diversify away from Brazil. For years, we have been telling the past generations that Brazil was risky, the institutions were weak, the economy was weak, the currency was weak, and the developed countries were strong. Now, it's everything upside down, right? And everyone is going to Brazil. So the Brazilian is saying, why am I now going to leave the party now that everyone arrived, right? So and to give you numbers from our business, we started, our initial clients were all offshore. And now offshore is about 15% of our business.
50?
No, 15. With that said, we didn't lose one client since day one in the offshore business. It's just because new money is just either staying here and money that is offshore is trying as they can to come back in directly or indirectly. Now, if you ask me what I see going forward, if we do our job correctly, we have to convince the clients. We have to win this fight and convince them that they should diversify away. A client that sells his company, puts 100 million in his pocket, you cannot think that he has to stay with 100 million in reais in Brazil, no matter how established and what improvements we have achieved. And we can do this in different ways. You can do this with local vehicles investing offshore, and we have seen a nice entries in this market as alternatives for the local investors, and like other jurisdictions and so on. But I think that if you ask me this question again in 2 years, I will give you a higher bracket.
There is a point that many Brazilians who has already investment offshore, they like to buy Brazilian bonds. I would say more than 50% of the money that's offshore is allocated in Brazilian bonds. And it's very hard to convince them to buy another thing to diversify the money. That is very hard. So in my office, I have 10% only offshore. And the last 5 years, what they did was bring the money from offshore to locate in Brazil. I believe that the real valuation has helped a lot to do this. But I believe that, as George, we must allocate more now offshore than here in Brazil.
My story is not different. We started 2003 with 20% money onshore, 80% offshore. Now it's the opposite. It's 20% offshore, 80% onshore. Most of our offshore money is invested in non-Brazilian instruments because, as I mentioned before, are people that want a diversification for their portfolio. But I agree with them. I think that in the near future, this trend will become more balanced between offshore and onshore. But at this time, it's difficult because we have a Portuguese joke who says, it's better to be healthy and rich than poor and without any money. So you can invest in Brazil with your money just aside of you, protected the inflation, 6% per year, and stock market going up, good managers achieving 10% over Bovespa. Why go offshore? To fuel the next inflation in the United States?
Okay, I do believe that the interest will come when real depreciate in a sudden way. Definitely people would like to buy dollars at 2 per dollar than now. Probably it will happen in the future, but we don't know the time frame to this to happen. More questions?
You mentioned, Otavio mentioned that it's important for the asset managers, for the international asset managers to have a presence here. But you didn't talk much about the structure through which the investment would be made. So how important do you think it is, this new possibility of local funds being set up? And does it make a difference for the different type of investors?
I think the local presence is not an office. It's more a presence, a frequent presence here, or to inform well the clients through a very well-organized agenda. And I feel that people are willing to buy feeder funds that invest abroad. I have been perceiving great interest from sophisticated clients, even though the asset raising is still slow, but it's a subject that comes to the table every single meeting. So I think it will be a reality in the next years.
I agree with Otavio. I think that the current setup for offshore managers to raise feeder funds here is still kind of aggressive. You still need, like, on average, a million minimum fee, a minimum entry level to get in. But I guess that what we're hearing from CVM and other players, that we might have these conditions ease sometime in the future. For the fund of funds manager, on the other side, that's everything we need, right? If someone comes and suddenly broadens our space of strategies, that's music, right? Our local problems is that a lot of the strategies available are either too correlated or they are constrained in size. So foreign other strategies are very available.
There is a structure that I have been seeing, that they are launching funds here in a vehicle that invest here, but they buy assets in the local company offshore, and this fund here replicate the strategy offshore. And in my opinion, it's easier for my investor to sell this, and they buy this kind of products. And I saw some companies doing that, starting doing that. Maybe this can be a good beginning for hedge funds to try to sell your track record and something here in Brazil.
I really don't know. I would suggest for the hedge funds to find a distributor in Brazil. In our case, it's difficult because we usually don't buy things that are being selling to us. As soon as we have a strategy and we need some manager for a specific task, we go outside, we look for it, we spend 3, 4, 5, 6 months to try to find the best manager, and then we hire them if they accept us. But I don't remember last time that I got a visit from a fund and said, "Oh, this is a great fund, we'll invest in that." We're much more qualitative, so we don't get impressed by results. So I don't know. I think that a distributor is the best way to go to Brazil.
Private equity and other less liquid investments, it's definitely something that it's growing. If you ask a client right away, he would tell you that he prefers what he has been used to, which is daily liquidity and readily available redemptions, or the possibility of a redemption. But having said that, take credit, for example. Clients are taking positions in credit structures that they need to stay locked for 2 or 3 years. So how different that is from a private equity setup where you have to stay locked for 3 or 4 or more years. If you there are a number of private equity vehicles that raise money in the last 2 quarters in Brazil to invest in Brazil, and they are being sold not only offshore but also to Brazilians. And the interest is increasing. But still, you face the same enemy on the other side, which is 12% a year, no worries, no work. Right? So what kind of a private equity return or a real estate return are you looking for in order to get into the gamble? That's the question.
I believe that for private equity, you must achieve just high net worth individuals with high level, because just this kind of people, you can sell a product like that here in Brazil. I'm telling about more than 50 million US dollars prospect.
I think this is also my problem. I only recommend our clients to invest in private equity if they have at least 30 times that annual expenditure in available funds. And it goes to 50 million or something. So we have just less than a dozen investors in this case. And I think that private equity in Brazil has not a history that can convince people to invest. We are starting investments, but very carefully, and basically touching with a fund of funds of hedge funds in order to learn how the tropicalization of the private equity industry will develop in Brazil.
Thank you.
Just one comment that other than the fund of funds, something that we've seen and we've done at BAWM, but I think it's a start for private equities, we've seen a lot of club deal type of investments in Brazil. A lot of people grouping together to get deals done, and not necessarily a whole private equity fund set up. But clients are able now to look 10 years ahead, right? So it's getting there.
Okay, thank you for the panels. I think our time has gone up, so I'd like to thank you and to give you a warm applause. Thank you.